Hello, I'm Noelle Lim on ASEAN Speaks by Maybank. Today we assess how ASEAN markets and currencies would react to the FOMC's decision on Wednesday if it raises the interest rate by 75 or 100 basis points. Chua Hak, co-head on macro, discusses with our analysts.
Hey, hi, good morning, 19 September. So just a quick recap of last week. There was a sharp sell-off in the markets as US inflation came in higher than expected. Wilson fears that the Fed may have to raise interest rates more forcefully to tame the worst spell of inflation in 4 years. The comments from FedEx CEO didn't help. He warned that the global economy was headed for a recession. FedEx share price dropped 23% after the company disclosed that it would be closing offices, freezing hiring, and parking aircraft in response to a collapse in package trading volumes. The S&P fell by about 5% for the week. Nasdaq fell 5.5%. Stoxx 600 fell 3%. And MSCI Asia Pacific Index fell almost 3%. Hang Seng fell 3.1% on the week and closed at a 6-month low. Most other ASEAN markets fell 1 to 2%. Exception was Singapore. It actually ended slightly in the green for the week. The Fed funds future now is suggesting that Fed will raise the Fed funds rate to 4.5% by next March. That's up from the 4% just a week ago. Hiring borrowing costs will likely tip the US economy into a recession. The Fed meets this week and is expected to hike by 75 basis points with an outside chance of 100 basis points. Just to update as well that Chengdu is relaxing COVID lockdowns, and there's some news media reports that Hong Kong may be considering eliminating the 3-day quarantine requirements. This week, there will be key interest rate decisions by major central banks, including the US Fed, Bank of England, Bank of Japan. I think also in focus will be the August inflation data for Japan, Singapore, and Malaysia. For Singapore's case, an elevated core inflation number will likely mean that the MAS will tighten again at the October policy meeting. In our view, probably via a recentering of the Sing-Near exchange rate that's currently trading at about 1.5% above the midpoint of the band. There will also be August trade data for Thailand and the 20-day September trade data for South Korea and the August export orders for Taiwan. I think the South Korean and Taiwan electronic exports will help provide some guidance on whether the global tech and chip cycle will continue to turn lower. Note that Nordex Singapore Electronics August came out last week. Bad contraction, minus 4.5%. That's the first time since 2000, and I think it pretty much raises the risk of a technical recession in Singapore. The week will end with some prelim September PMIs for US, Eurozone, UK, and Japan, which should also help indicate whether a recession is imminent in the fourth quarter. And today, we have Jue on Indonesia, Anand on his latest ASEAN strategy, Winson on Bank Negora's rate decision and Indonesia's bond auction, Andy on the renminbi sharp depreciation and the UK mini budget and British pound, and Chee Ting on the palm oil outlook and prices. So let's kick off first with Jue. The Indonesian stock market is the best performing in ASEAN and Asia this year. Indonesia reported exports and retail sales last week. Are the numbers still coming in strong and can it be sustained?
Hi, morning everyone. So Indonesia's trade performance remains very much resilient in contrast to the moderating trend in most other countries. Exports surged by 30% in August to another record high level of almost $28 billion, mainly driven by commodities including coal, nickel, and palm oil, but also manufacturers such as iron and steel and electrical machinery. This resulted in trade surplus widening to a 4-month high of $5.8 billion. And we think exports will likely stay resilient as demand for commodities remain firm. Although the year-on-year pace may moderate due to higher base effects, coal prices stay elevated as European countries scramble to conserve natural gas supplies for the winter, while an EU ban on Russian coal on 10th August added to supply pressures. Palm oil exports are also being boosted by the government's export duty reduction. On the other hand, we think that retail sales, which after seeing a 5.4% increase in August, will likely slow in September. And we may also see a dip in consumer confidence index following the 30% hike in prices for Pertalite and solar diesel. Stop there.
So inflation has been under control, largely because of the fuel subsidies. But now with the fuel price hike and subsidy cuts, would this impact your outlook for inflation and growth?
Yeah, now with the fuel price hikes, we cut our GDP forecast slightly to 5% for this year from 5.1%, and to 5.1% for 2023 from the previous 5.2%. Given that this fuel price hike and a more aggressive BI tightening will likely weigh on private consumption, previous fuel price hikes of similar magnitudes in 2014, 2013, and 2008 have shaved off around 0.2 percentage point from household consumption growth. But this time around, we think that the dampening on domestic demand will likely be cushioned by firm net exports, given that commodity demand stays resilient. With the hike in fuel prices, we have also raised our inflation forecast for headline CPI to average 5.2% this year, compared to the previous 4.8%, and 6% in 2023 compared to the previous 4%. BI is meeting this week on the 22nd. We are looking at a 50 bips hike, given that the fuel price hike will trigger a jump in inflation to almost 7% in September. We think BI may hike by another 25 or 50 bips for the remainder of the year. That would bring the policy rate to 4.5 to 4.75% by year end.
Great, thanks, Jay. Let's bring in Anand. Anand, so I think on your fortnight strategy, ASEAN markets have been rather mixed over the last 2 weeks. Jakarta Composite Index is setting a new record high. Singapore is holding up well, but Philippines and Vietnam markets have been soft. How would you explain the divergent market performances?
Yeah, hi, good morning, guys. So it's been an interesting 2 weeks for ASEAN markets. You did see a big sell-off globally following the very hot August inflation read from the US last week. But again, ASEAN markets have been relative outperformers. As you've pointed out, Indonesia has really bucked the trend. You can see from figure 2 here, it is the best performing index in Asia, pretty much, and probably much of the world at this point in time. And also Singapore as well in close second. Both are showing, year to date absolute gains. The rest of ASEAN, though, is not far behind. Malaysia and Thailand are down year to date. But again, compared to North Asia, compared to developed markets, I think we are continuing to see outperformance. And the reasons are still quite fundamentally driven. 2Q results were quite robust across the board. 2Q GDP numbers were also robust. You saw year-on-year growth of 8 to 9% in countries like Malaysia, Vietnam, Philippines being reported. And also, crucially, when we look at the differentiation between these markets, why is Indonesia, Thailand, Malaysia doing much better than the Philippines, Vietnam? Foreign flows have also returned, and you can see this in figure 4 here. The 3 countries, that big red bar there, that have seen huge inflows. Thailand is at pole position, followed by Indonesia and Malaysia. So there's really a lot of safe haven flows coming into the region, that's really helping index outperformance.
So Anand, any other major themes that's driving the markets? And I guess the Fed is due to meet this week on Wednesday. We'll find out what is 75 bips or 100 basis point hike. Do you think the ASEAN markets will hold up and remain resilient?
It does feel that way. It does feel like we will hold up. I mean, investors are not strangers to what's happening in terms of inflation interest rates in ASEAN. And we're having more of the same in the second half. Malaysia just raised rates. We're going to see more rates from Indonesia following their fuel price hike for sure. And Philippines has been very aggressive on rates. Thailand is catching up. So the dynamic for the second half for ASEAN is not dissimilar to what's happening in developed markets, except that we have the reopening tailwind, and also the interest rate increases we are forecasting here are much more moderate in nature, despite some rollback of subsidies. So net, we do expect ASEAN to be an outperformer in terms of GDP growth expectations, and by relation, in terms of equity markets as well. I think, in terms of our positioning, we remain quite balanced. We have across all the ASEAN markets, we have a fair amount of growth and value. But I think what we've seen over the last couple of weeks by analysts is a bit more aggression in upgrading recovery plays. So if you look at the new initiations we've had in the last 2 weeks, we've initiated on Bloomberry in the Philippines, which is a classic recovery play in the casino space. We've put in GT Cap into our top picks portfolio there as well, which is an auto play, also a classic cyclical recovery play. In Vietnam, we've initiated on an auto player as well as a consumer proxy, both also recovery plays. And in Thailand, we've initiated on SAPE and digital comms, SAPE in particular, a leading beverage maker, very much leveraged to a broader macroeconomic recovery. So we are, I guess, bottom line, turning a bit more constructive on recovery plays.
I guess besides the recovery and sort of by recommendations, are there any sector or stock downgrades that you want to highlight as well?
Yeah, at this point in time, we are a bit more cautious on consumer discretionary. We do expect inflation to pick up pace across ASEAN, and in two countries in particular, Indonesia and Malaysia. We are actually forecasting higher inflation next year compared to this year, when the rest of the world is going the other way. Higher inflation this year, but lower next year. And that's really because of subsidy rollbacks, which will have an impact on consumer affordability as well. So I think, in those countries in particular, we are sort of steering clear of consumer discretionary. And of course, in Malaysia, we remain underweight the glove space as well. So we don't see much improvement in fundamentals there due to competition from China. So those would be the two big standout underweights: consumer discretionary and gloves.
Great, thanks, Anand. Winson, so the US and G3 bond yields have been edging higher on inflation fears and higher Fed funds rate, I guess, persisting for longer. Are the high yield curves also showing up in the ASEAN bond markets?
Hi, morning, Harbin. Yeah, that's right. The recent increase in G3 bond yields like the US, UK, and Germany have been unexpectedly sharp, especially after the upside surprise in US core CPI data last week. And the jump was actually led by the front end, less for the long tenor yields. And because of this, the yield curve inversion actually deepened. So currently the US 2-year 10-year spread has turned more negative at minus 42 bp. And the current market pricing expects an additional 150 bp in Fed funds rate increase to around 4% by the end of 2022. And I think this is roughly what the new dot plot will show after the FOMC meeting this week. In terms of ASEAN bond performance, yield have also gone up, but continue to show better resilience, especially for Malaysia and Indonesia. For example, in terms of bond return, US Treasury is down by more than 10% year to date, but Indonesia and Malaysia are still showing slightly positive total return year to date. Even for foreign holdings of local currency bonds in the region, except for Indonesia, countries like South Korea and Thailand received net inflow year to date, while Malaysia also received big foreign inflow last month.
So Malaysia Bank Negara recently hiked the policy rate by 25 bips. That's the third rate hike. What's your interpretation on the move and the monetary policy statement? How many more rate hikes to go for this year and next? And do you think the Fed move this week will have a bearing on Bank Negara's policy decision?
The language of the Bank Negara MPC statement sounded neutral, but there was an additional caveat saying that the MPC is not on any preset course or predetermined path in terms of rate hike. So basically, the central bank is trying to tell the market that having seen 3 consecutive rate hikes doesn't mean the 4th will come at the next meeting in November. We think the BNM still want to continue with rate normalization, but they don't want to commit themselves to another hike now, given the fast evolving global economic conditions. And this, I think, could be a sign of hesitation. Our baseline view is still for BNM to raise the OPR by another 25 bp in November. But I have to say, with weaker convictions, move has global implications, whether directly or indirectly, and the Fed decisions affect global financial conditions. But I think BNM's policy decision is still driven mainly by the domestic factors. We expect some policy divergence. And what I mean by policy divergence is not about the direction, because most central banks are still hiking rate currently. What I mean by divergence is in terms of the pace of tightening and also where the terminal rate is compared to the historical mean.
So Winson, Indonesia had a government bond auction last week. How was the interest? Was there any reaction for the fuel price hike and fears of a more aggressive Fed?
So far, Indonesia bonds have held up surprisingly well. After the fuel price hike, a bond yield have gone up only slightly and outperformed the US Treasury. Last week's government bond auction received good demand. The bid to cover ratio was a healthy 2.7 times. I think an ongoing concern we have about Indonesia bonds is what will be the true pricing on the yield curve. when Bank Indonesia needs to stop buying government bonds. BI has bought a lot of government bonds since the COVID, and it is still buying at sizable amount when the domestic economy no longer require highly accommodative monetary policy. And most central banks are either reducing the size of their balance sheets or at least have stopped buying. So this is something we will watch out for.
Great, thanks, Winson. Andy, it looks like the RMB continues to weaken and now is breaking the psychological threshold of 7. What's the risk from here on of an even steeper correction with the Fed set to hike by another aggressive 75 or even 100 this week?
Good morning, Hak Bin. Morning, everyone. The yuan breach the key 7 handle, I think last week, so implies in some ways there's a shift to a more cautious mood overall in the region. Our view is I think dollar CNY and CNH could probably test 705 first, and then towards between that range of 705, 710, if the US dollar support intensifies with any surprise of the 100 basis points, or in addition to that, some rhetoric by the Fed or Powell going forward as well. But I think in the near term, dollar CNH could hover around the 702.70 after the 7 handle which broke last week. But for the moment, it is actually retraced back slightly below 7. Beyond the near term going forward, we mentioned that we expect CNY weakness to persist in the near term, underpinned broadly by continuing broad dollar strength. But we think as we approach the 20th Party Congress, which is on 16 October, we do not expect to see very sharp depreciation in the CNY, because we think stability would still be preferred around a key political event like that. And so the next key level, the key level would be 720, which were the highs of March 2019 and May 2020. But for now, I don't think a move towards 720 is likely, because it requires quite a sizable strengthening in the broad dollar, and I think the CNY unlikely to weaken a bit more on that front. Thanks.
So Andy, how do you think the Asian or ASEAN currencies will react to the Fed decision this week? I suppose which currencies are more vulnerable near term?
Yeah, very pertinent question. First factor is definitely the rates differential side or the policy differential side. I think the long dollar trade, most investors have actually seen it working well across G10 and EM this year. So I think the focus on dollar Asia, our view is I think the currencies that will be most affected will be in part or in most part a reflection of the policy rates differential so far. I think Anand has shared just now about some of the resilience of some currencies, but in terms of policy differentials, if you look at the Fed's 2.5% or so, I think North Asia would be the most vulnerable in terms of Taiwan dollar, Korean won, and then in the Southeast Asian space, I think Thai baht in terms of the policy rates being much lower and needing a bit of a catch up, followed by probably ringgit, and then IDR and peso, which are already at levels about 3.75%. And Singapore, the SOR is already at 2.93 or close to 3%. So in that sort of pecking order, in some sense, North Asia followed by Thai baht, and then ringgit with some resilience on the rupiah aspect as well.
Switching gears a bit, just jumping to the British pound. I guess under the new Prime Minister Liz Truss, the new UK Chancellor of Exchequer, Chua Hak, will be delivering the mini budget speech on Friday this week. The pound has collapsed to new lows, with the UK now economy facing almost double-digit inflation and a recession. So what are your expectations for the budget, and is the British pound at risk of a further sell-off?
Yeah, I think for the UK side, definitely a huge number of negative factors on their front. So the Chancellor Kwasi is likely to announce a £30 billion tax cuts. I think they want to ease the pressure of cost of living crisis and boost economic growth. I think some moves that has been out there is in terms of national insurance rise, freeze of corporation tax in the emergency mini budget. The tax cuts, I think one of the key things is that tax cuts will breach the fiscal rule, which requires national debt to fall as a share of national income between 2024 and 2025. So I think it will extend. I think likely he will probably announce an extension of that target beyond into the next parliament to tackle the economic crisis. Our view is, I think with all that, I think the scrapping of the corporate tax, all that will lead to a failure of balancing the books and risking inflation at the same time. concurrently with high interest rates, all that could be negative for the pound. So my sense is the broad dollar strength coupled with relatively small fiscal and monetary policy response on the UK government and BOE so far to react to a severe negative external shock actually is negative in some ways. So we think that the negative sentiment on the sterling will continue. We expect some overwhelming negative pressure on the sterling to slightly below 114 towards the 112 this week potentially, and more pressure on the sterling in the short term. But we think if they breach the support of 1.1410, it could go further towards those levels, and then eventually, hopefully, if some retracement will happen towards the end of the year, towards the 115, 116 levels for sterling.
Great, thanks, Andy. Chee Ting, all palm prices have been sliding lower. Any signs of stabilization from stockpile data? And where do you see palm oil prices going for the rest of the year?
Hi, morning, Habin. All palm prices have been sliding of late in anticipation of a build-up in the stockpile as the industry enters into its seasonal production peak cycle right now. And POB's latest August stockpile announced last week jumped 18% month-on-month to 2.09 million tonne at the 33-month high, while output picked up seasonally with 10% month-on-month growth in output to 1.73 million tonnes. Exports have lagged production growth. In fact, August exports even fell 2% month-on-month to 1.3 million tonnes for Malaysia. We believe the weak exports have been largely due to stiff competition from Indonesia, as the government of Indonesia recently turned more export-friendly, even granting extension of export levy exemption till the end of October. The export levy exemption was previously meant for just 1.5 months. That was to end in August prior to this. As to your question as on any signs of a stabilization in stockpile, I certainly hope so, as CPO price is currently trading at fairly attractive discounts to competing oils. Palm oil is trading at more than $500 discount per ton discount to soy oil, its closest competitor. With such attractive discounts, demand should pick up to arrest further increase in stockpile. Bear in mind the current peak production months for both Malaysia and Indonesia usually last till October before output starts to taper. As for palm oil price direction, we believe CPO price will continue to trade sideways over the next month as the market needs to digest the large palm oil stockpile residing in Indonesia in the midst of this peak production season. We believe CPO price will start to recover somewhat towards the end of fourth quarter.
So Chee Ting, on the Indonesia-Malaysia competition, has Indonesia fully regained its market share from Malaysia since the Indonesian government lifted the export ban? I guess have the excess stockpiles close to being all cleared? And I guess when do you expect the Indonesian government to reinstate the export levy?
Yeah, so I think the Indonesia has been regaining market share from Malaysia. We understand from corporate captains from recent second quarter results briefing that things are looking much brighter for exports from Indonesia now that the government has turned export friendly from being broadly restrictive a few months ago due to logistic constraints and high export taxes earlier amid falling CPO prices. Indonesia's exports pickup has been relatively slow up until August. We believe the tide is turning in favor of Indonesian exporters. We believe the excess stockpile will take time to clear, but probably by the end of October, and exporters will take advantage of the export levy exemption to push for exports before the expiry of the exemption by the end of October. As to whether when the government will reinstate the export levy, it all depends on whether the excess inventory will be broadly cleared. For now, our base case assumption is the inventory should clear by end October, and therefore the export levy should be restated in the month of November.
Great, thanks, Chee Ting. That's all we have for today. Have a good week.
For specific advice, check in with your trading rep and also market insights on the Maybank Trade app. Follow us on Spotify, Apple Podcasts, and YouTube. I'm Noelle Lim on ASEAN Speaks by Maybank.